So, Pierre, we normally don't talk so much about a CEO's sleep patterns, but this has become part of the news. What do you make about his own admission that he's not sleeping, or if he's sleeping at the factory, and does that give you confidence or lack thereof in his performance?
Thanks, Emily. The first thing I would say is that we haven't learned that much more in recent days or in recent weeks. People who know Elon Musk, who know his work habits, know that he has been behaving like that for multiple years. And this is probably one tiny part of what makes him an exceptional individual. I think what we learned, especially in the interview he gave to the New York Times recently, I would qualify that as nothing new. He works very hard. His personal life is significantly affected by that. And this has been part of his success, his professional success, his entrepreneurial success in the last decade.
Perhaps nothing new for Elon Musk, but it is certainly unusual for a CEO to tear up in the middle of an interview with the New York Times. Liam, there are some recent developments in that the stock price has plummeted. Is it increasingly unlikely that Elon Musk could take Tesla private at this $420 a share price that he was initially proposing?
Yeah, I think, on its face, and we still lack so many details that you would normally get with this kind of thing. But on its face, it just seems unlikely that a buyer or set of buyers would come in and pay right now what would amount to about a 45% premium in order to take a minority stake in an unprofitable company, and that stake also be pretty illiquid too. I think the second problem that's kind of getting missed right now is that we still have a situation where it's looking increasingly unlikely that Elon Musk didn't have anything close to a deal locked down when he effectively told the market that he did, and that's just a problem that's still bubbling under here, and even if we did get close to some kind of a deal, that's still a problem for anyone looking at investing in Tesla.
The SEC, as we now know, it has initiated a rapid inquiry into what happened here, perhaps more quickly than they usually do. All this considered, Pierre, looking at the stock price now, what odds do you give this of Elon being able to get this done?
I actually give odds very close to zero, to be honest. I remain very positive on the stock price, and I think Tesla is at a turning point. Is actually turning the Model 3 into an industrial reality. But I don't think this go private deal has wings. The way I interpret it is the following: Elon Musk is extremely incentivized to do it. That's really a personal preference. As a CEO, given his personality, given the situation with the investment community, it would be a great relief for Elon to take the company private. But let's face it, if you're an investor in the company, there isn't that much value in being taken private. As Liam said, there would be a downside in terms of liquidity. And on top of that, the company would not benefit from anything tangible I could put in my company model, in my forecast, as a result of being taken private. So I think what happened, and I think it's important to put all these things in perspective against each other, is that a couple of weeks ago, Elon Musk had positive conversations with investors. Actually, it's more at the back end of last month. On the back of that, he started thinking about a plan to take the company private, and then he tweeted the idea out. And then he realized his tweet was making him face significant liabilities, and because of that, he started a communication campaign. And I think the interview in the New York Times last Friday was part of that, trying to increase his chances to defend himself well against these liabilities. So I think he's now trying to push forward this idea that he's overwhelmed, that he's had a very tough time, and that's going to probably come into the negotiation with the SEC and in civil lawsuits to defend the fact that whatever he has done, he did it in good faith. Going forward, the deal is not going to happen because investors are not going to see value in paying a premium to the stock price and giving away liquidity.
Meantime, Liam, we've got new information about the Saudi Sovereign Wealth Fund, which Elon Musk has said was the party behind the part of the tweet that said funding secure. There are reports now that they are looking to take a $1 billion stake in another electric car company that would give them control of that company, Lucid Motors. They already do have their 5% stake in Tesla, but does that mean it's increasingly unlikely they'd want even more of Tesla?
Well, I think it's hard to say whether a $500 million or $1 billion investment in another car company would rule it out. But I think what this illustrates is the bigger problem of Musk's whole approach to this, which is, he put out the tweet and then sometime later we got this long explanation involving meetings with the Saudi Arabian Sovereign Wealth Fund, and he thought that a deal was in the bag. In doing that, he effectively handed Saudi Arabia a very effective tool to crush the Tesla stock price anytime they want by simply leaking a story about being interested or not being interested or looking at another company. It just shows the level of risk that Musk's approach has exposed the company to.
So, Pierre, if this doesn't happen, after all of this, do you see a big downside for the stock, or will investors be so happy you could see it rise back up? I mean, if this doesn't go through and you're not the only person to tell us there's a 0% chance here, what then for Tesla?
So I think that would be probably the end, the end of most of the ongoing storm. And probably the stock will go back to a focus on fundamentals. And we know well what the key fundamental controversies are on the stock. They are whether the company is able to stop burning cash early enough to avoid getting into a difficult liquidity situation. We know the company has $2.2 billion of cash at hand at the moment. And facing that is $1 billion of that is actually customer deposits that can go away relatively rapidly in a confidence crisis. And the company has refinancing deadlines in Q4 and in Q1 that are relatively significant. So the key question number one will be, can next quarter or the quarter after next Tesla stop burning cash? And then the next question, of course, is as the Model 3 ramps up in terms of production volumes, does the profitability of the Model 3 improve and actually follow the trajectory we expect? So once this deal is out of the table, Wall Street investors are going to focus back on fundamentals, and that's where we find our conviction on the stock, and that's where we have our buy rating on the stock.
So, Liam, if the deal doesn't happen, what does that mean for the future of Elon Musk? It would be a huge public, perhaps, embarrassment, to be sure.
I actually think it's more than that. I think there's a bigger question hanging over Tesla as a result of all this. If you go back to August 1st at the results call, Tesla claimed repeatedly that it was on the cusp of sustained profitability, positive cash flow. It's just very odd to me that we went from that pretty bullish message to this rather bizarre episode about having the company taken private as a way to deter short sellers, because surely if the company is on the verge of that brighter future, that would be the surest refutation of the short thesis, and it would happen within 3 months. I think the biggest question for me is, why did we segue from the positive message to this strange episode so quickly?
All right, Liam Denning, Bloomberg Opinion, thank you so much. We're going to talk a little bit more about Tesla and this SEC inquiry later in the hour. Pierre, meantime, stay with me, because I want to mention that New Street Research has cut Apple to sell, citing material disappointment in 2019. You are leading this team of analysts, Pierre. What do you think is going to be so disappointing? Well,
what's going to be disappointing is the aftermath of how successful 2018 has been. Our perspective is that the iPhone X has been extremely successful, very well received by consumers, and to such an extent that we think between 10 and 20 million consumers actually brought forward the refresh of their iPhone, the replacement of their iPhone, because they were attracted by the iPhone X. So that's a great success. Apple probably this year will have sold in fiscal 2018, 65 million iPhone X. We think 10 to 20 million of these are actually brought forward demand. So when you fast forward to 2019, what happens? These people who just bought an iPhone X and do not replace their phone every year are not going to buy a phone. And that's creating an air pocket. And we see a very significant risk on expectations for 2019 in terms of iPhone shipment units and also in terms of ASP, because of course the iPhone X is a high price phone that drives ASPs up. And as it happens, investors will realize that we are not done with the weakness in iPhone demand. We are like in a multi-year period of transition where iPhone users still like very much their phone and use it every single day, but they replace it less often. And this transition already happened in the PC market between 2012 and 2017, over 5 years. And PC shipments declined by 30% over that period of time. So it's a very long and very tough headwind that weighs on iPhone shipments. And this is something investors have forgotten in 2018. Because Apple did very well with the iPhone X. The problem is that most of that performance is demand being brought forward and calls for an air pocket in 2019.